There we are.
Hey everyone, welcome to Marathon Money, and you know who I'm back with for our monthly or maybe bi-weekly analyst with Carrie from wickedstocksofficial. Man, it's amazing to be back, and we're gonna get it started. The stock market's up a little bit, the Dow's up a little bit, the S&P's up a little bit, um, Nasdaq's up a little bit, so that's pretty good. Crude oil's at 102. What do you think about that, Carrie?
Well, this is Brent. Can you see the screen?
Yep.
Okay. Yeah, this is a monthly chart of Brent Crude. This goes back over 20 years. And we've been pushing into this zone of resistance. This long-term channel top actually goes back to the 2008 high, and it uses the lows that were put out in 2008 and then again more recently in 2020. So this is a big deal, this long-term channel top. It's 18 years in the making. We pushed through it substantially during COVID, but we never closed above it on a monthly basis, and then we fell away. So we're back at it again. And in fact, more recently, we have this descending channel structure. They're together at 115.98, 116.62, as long as Brent does not settle above this area. And I'm going to say on a weekly basis, but even a daily settlement above 116.62 is reason enough to exit any short positions one may have established in Brent, because I do think, now this is a monthly chart. Normally, I would call this a 1 to 2 year objective at 169.30, but the environment that we're in right now and the kind of the hot war happening in Iran and the Straits of Hormuz, that this could be a matter of days, weeks, if not days. So I would say 169.30 would be in reach, say by the end of April or sooner, if we were to close this week above 116.62. Until then, this is an area where Brent Crude may be forming a long-term high. We may actually see an annual high here, and we could fall back all the way south into, basically you've got the upper 50s somewhere in here, these old lows. I could see we're falling back into this zone over the next, I don't know, if this turns into a peace settlement and the straits open up and everything kind of returns back to normal, I could see the low 60s, the low 70s into the upper 50s within 3 to 5 months, perhaps. But that is crude oil in a nutshell, at least Brent
What do
crude.
you think
Go
would
ahead.
happen at 169? What does the economy look like at 169?
I think it's either stagflation. I think if you've got crude oil at 169 a barrel, it's going to pinch the Europeans and the Asians a lot more than it is the United States. So we won't feel it as dramatically. It'll definitely be more price at the pump, but I do think there'll be supply shortages. It'll be. I can't help but think that it'll be recessionary. At the worst, stagflationary, where you have a stagnant economy in the United States and higher inflation. And I would think if we got up to $170 a barrel, that it's the forces that be will work overtime in resolving this conflict, because it doesn't help anybody.
No, it
Uh,
doesn't. And it
yeah,
doesn't
I'm going to
help
jump.
anybody at all.
Go ahead. I'm not quite sure how much time we have, but I'm going to rifle through some charts here. This is the NASDAQ 100. The NASDAQ threw off a significant sell signal last week. It closed below this structure at 23,830 early in the week. And I do see the low 22,000 handle, and quite possibly all the way south to 20,660 in the NASDAQ 100. So this is the index itself. I also analyzed the triple Q and the SPY at Wicked Stocks. I just don't have those charts here, but they look identical to this. And so the triple Q settled in a long-term sell signal. By that, I mean, I think within we could possibly see this area this week, depending on what happens in the world and with respect to whether we really are in peace talks or not with Iran. There seems to be a mystery. If it's sort of acknowledged first off that there are no peace settlements, and that we start bombing some of their infrastructure this week, which doesn't look to be the case, we could actually see this
There's
area.
boots on this. They're planning on boots on the ground this week as well, right?
Yes, they are. They are. I think it. I think it all depends. We're ready, but we could stay ready for weeks to come, depending on what's happening with those talks. And so, yeah, I think 20,660 is likely. If you just technically, if you take a look at this rounding top process, heavy consolidation here for 6 months, and now we're below this. I think 20,660 and climbing. This is a 3-4 year channel bottom, should be considered an objective. over the next 2 to 3 months. And if over the next 2 to 3 weeks we close below 22,133, I think we're just a few weeks away from reaching this. So this could be potentially by the end of April, by the end of May, I'd say at the longest. And I call this an objective unless we close back above 23,830. That is neutralized a long-term sell signal.
What do you think the percentage of us closing back over 23?
I think this has everything to do with what's going on in Iran and crude oil. If course, crude oil is obviously directly impacted by this as the stock market. But I think if we can't resolve this, if there's still, especially if strikes resume aggressively, I think we're going to head south. I think the odds favor south anyway. Technically, what are the odds of closing back above 23,830? I think that comes down to everything as to whether there's an actual peace proposal that is acknowledged by the Iranians as well as the Americans. So,
okay, but if we put boots on the ground, we're probably going to see that below that 22222 mark.
I would think so. I would absolutely think so. I would think that it's heating up, and yes, there's a lot of uncertainty. Got American troops on the ground. I think 20,660 in a hurry, and you can see the same in the S&P 500. So once again, this is the S&P 500 index, not the SPY, but the chart looks identical as well as the S&P 500 E-mini futures. They look identical to this. 6641 we settled below actually 2 weeks ago. So the S&P 500 tipped its hand earlier than the Nasdaq. Nasdaq was a trailer. But we've been in a sell signal in the S&P 500 for this is our 3rd week now, and once again expecting this high area from Dec 24 into Feb 25, 6147 roughly. But I do think as far as the S&P is concerned, we could make our way all the way south to this 3-4 year channel bottom at 5373 before this all shakes out. And this is even technically, like I say, you can disregard what's happening in the world, although you can't. But technically speaking, you have this rounded top. When you come off the backside of these, you get this what I call a cascade effect, where the average weekly range actually increases. And this is obviously consistent with what's happening in the world, but technically speaking, that is oftentimes what happens. You could see a very similar development here, where from Dec 24 into really Jan 25. Feb 25, we have this kind of a rounding top and then the collapse. And the sell signal was the week of March 3rd, and it only took about 3 or 4 weeks to sort of plummet into this low area. And I think we could see a very similar framework here as we move through the month of April. Once again, to answer your question, I don't see the market, this S&P 500, closing above 6641 this week unless there's an actual agreed upon peace proposal by both sides that is acknowledged.
Can I say something?
Absolutely.
With the S&P 500, there is a massive red candle. I'm looking at it from the candle standpoint. There's a massive monthly red candle. I feel like if we close at this 6,384 mark, or we close below 6,500, I cannot see the month of April going well, since we only have one more trading day left after today.
Mm-hmm.
What about you? Because like this massive engulfing candle, downtrend for the month, I can personally see this coming down to at least 6,000 before the month of May.
Yes,
I don't know how you feel about that.
I think you're absolutely right. You could pull up some Fibonacci's too off this April low of 48.35 against the actual move high, and you've got a 3/8 here at 61.68. There's a lot of going on here. I think we can get a nice bounce here, provided there's not a surprise event in Iran that's deeply negative. Some situation where the Iranians appear to get the upper hand over even a short period of time. I just think investors will run for the hills. You're going to people moving to cash. That's already happening. The sell signal that I see here indicates at least this kind of 6,100, 6,150 region. But I do think while we could get a decent bounce here, I think over time, I wouldn't be surprised to see 53.73. These higher crude oil prices have yet to fully, saturate the market, so to speak. We're just going to see, I just think that we're going to see a slowing economy from this. As long as this a conflict doesn't resolve. As long as crude oil is at $100 a barrel or higher, and certainly if Brent gets up over the level that I showed earlier, a 170 in reach, I mean, I just have to. That's an all-time high. And the more we hang out in those upper price zones, the last time we were up in this area, it was, and we haven't been returned to it, but a few weeks ago, it was a Sunday night futures event that lasted about an hour. By the time we awoke Monday morning, we were already down $5 a barrel from the high, and we never saw those highs again. And if we happen to run back up into that zone, and just hang out there for a few days, that in itself will set off selling pressures, I think, in the stock market. I'm going to move on to Microsoft. We'll go kind of through some of the Mag 7 stuff if you like. Microsoft threw off a sell signal like the S&P 500. Microsoft threw off a sell signal 2 weeks ago with the settlement below this. This is a 4-year channel bottom at 399.41. And our objective near term is the 345, 350 region roughly. But I do think that we could, before the year is out, perhaps see a complete collapse into the low 200 region. Now, I don't want to call 213.43, which is that October 22 low, an outright objective unless we settle below 344.79. And then I think we'll just see continued price erosion as we move into the third and fourth quarter of this year. But I don't think Microsoft. Go ahead.
What about the close below? What about the close below 349? Like you see this like back in April 01, April 2025, April 1st, there was if that month you'll see that the low was 344. Why if it closed below that absolute low of
this
that
pullback
month,
low?
Yeah, just that to like 344. Say if it closed below that, like I feel like the next resistance, the next like support would be 315.
Yeah, what I would normally do in this situation is I would start drawing kind of Fibonacci's just to see where they are. You do have a 5/8 Fibonacci at 344.08.
Yeah.
So you could round that down to 344.08. This is like the slippage factor below 79. But I do think this is the last Fibonacci that can hold. And in terms of 315, I'm curious where you're finding that. I mean, I could see that case here, this old low area, but I would just consider this a hesitation point. I think if we break 344, I wouldn't. I think that's actually quite bearish for Microsoft. This is like what's happening a lot in the software.
315 is from the 2023 October 2023, where the low was for that month was 311, but the open when it opened up at 316.
I see that 316.28. Yep.
I was saying that if it closed below 315, would it be a sharp decline into that 220, 230 area?
I think it certainly could be. I mean, the way I would see this is we close below 344. You've got a 1 to 3 week objective at roughly 315, if you want to call it. And I could see trading inside of this zone for a few weeks, maybe. But I think as time plays out, just bearish continuation. This channel bottom that we settled below was significant a few weeks ago. And, one of the targeting mechanisms I use when you have a very well-defined channel structure like this is the full channel extension, equal in size to the previous channel that was violated. That takes us into this zone, which is consistent with the October 22 low. And I know it seems dramatic, but it is what the charts are suggesting as a real possibility. I don't see it as a clear-cut objective unless we do indeed close below. Let's just call it the 344.08 5/8 Fibonacci. But I do think odds begin to favor this now anyway, and that is sort of underscored with a settlement below 344.08. I'm going to move on to Meta. Meta threw off a sell signal last week. That was a big sell-off last week in Meta, and I am expecting now this extreme channel bottom at 466.96. This is a significant support area. I just consider this more of a near-term sell signal in the midst of a long-term bull market. All of this is kind of counter trend right now above 466.96. I would be an aggressive buyer at Meta in the upper 460s into the low 480s by May. This is a zone that can be bought, and this I'm talking investment grade as well. Like through the rest of the year, we can round up from here significantly, testing 466.96 within a month or two, 3 at the most. I would expect a rebound back into the 580s and climbing. We could trade inside this band now all the way through the second quarter and into the third. And if we do close back above this channel bottom at any time, even this week, for instance, which I don't expect, unless we see the broader market show consistent recovery. That's why I started with the S&P 500, the NASDAQ 100. If they can get back above those channel bottoms they settled below last week, then I think that's consistent with Meta also closing back above 584.
But I'm looking at the monthly chart. You know, right now there is another engulfing candle. You know, it opened up at, you know, Meta opened this month up at like 637.
Yes.
You know, the low is 520. Right now we're sitting at 531. You know, with one trading day left in the month, if you look at the monthly chart,
right.
I just can't see April not having another at least under 500. Maybe close to 490. At least another negative month, unless something major comes out that is significantly positive for Meta, or the market just generally turns around and gives Meta opportunity. But I could see this falling below 490, and then obviously you're right about the resistance part on this, that 466. But
yes.
if Meta falls below that trend line,
yes,
you're seeing 358.
I am. That's a 5/8 Fibonacci. Then that would be my next target. And also of significance with the settlement below this channel bottom is a discontinuation of this upward impulse that is, played out since October 22 low. You know, you can make a case that this is still a market to be bought. The trend is still a series of higher highs and higher lows. Now, we do have this low here at 481, 479 area, but it is consistent even over the next, in about 4 weeks, this channel bottom will be consistent with all that anyway. So I could see a scenario where we slip below 479 on an intra-week basis, tag this channel bottom, and as long as we don't close below all this here between 479 and 466, this is still a long position to hold if established in this zone, anticipating within 2 or 3 months at the longest, this 484 and climbing formation. And, once again, this is investment grade. This is, I think you can buy Meta as part of your portfolio on a multi-year basis at 466. But if we do close below 466, I see the next objective, and it could be quick, 358, 61. That also lines up, not entirely, but you've got this high of 384 going back to August of 21. So, this would be the zone. I would expect this area to hold nicely for a period of time and maybe even long term. But once again, this upward impulse is over with a settlement below 466.96. And then Meta will just have to sort of find its way over time as we continue through the rest of the year. If we can close above 584.09 at the end of this week, which is highly unlikely, we've got a good low for the year. And I would then expect, and I can actually draw that out right now in pretty quick order, I would expect within several months, this channel top that is presently at 713 and dropping. This is our aggressive buy signal through the rest of the year. Upward momentum. We shift into a more aggressive upward momentum with this settlement. But if we can close above 584, that in itself is a decent buy signal into the low 700 region within several months. Let's take a look at Google, or Alphabet rather. We've been in a Wicked Stocks recommended everyone exit this stock, Alphabet, back in February when we put out, talking about candlestick, that doesn't show up here, but you've got a bearish engulfing pattern right here, a new all-time high, and then we close the week below the previous week's low. That's what I call a key reversal high. And then the following week, we closed below this rising channel bottom. And we've been bearish ever since, anticipating, because of the incredible vertical move, I call these church steeple rallies, where once the high is in, and determining that it can be tricky. But for me, this key reversal high was your first signal. Then playing the short side, or you're out of the stock entirely until we fall into this zone. And I do think 235, 242 is likely. With present volatility, we could see this by the end of April. In fact, I wouldn't be surprised because the church steeple, formation, you usually fall in a very similar symmetrical way. And this was just, what was this, September into October. This is like a 4 to 6 week move right here. I could see that playing out through the rest of April. And then this 235.44 formation, this is a solid zone to buy into through the rest of the year. This could be it for the sell-off. Resistance, I'm just throwing this 306.46 out here. This is the low of the high. If we can get up and over that this week, which is highly unlikely, but if so, then we're actually neutralizing this sell signal. And then we'll just kind of play it, 1 week at a time. Amazon's holding its own, but it's kind of one of those staple stocks almost. People are going to keep going to Amazon regardless of what the economy is doing. But we've got 198 handle support in Amazon this week, this channel bottom, and also the low settlement price on the weekly chart a couple of months ago. If we close below 198.03, Amazon finds significant support at 182.41. If you've noticed in some of these other stocks, Microsoft, Meta, et cetera, they've closed below their 1 year channel bottom last week and the last couple of weeks, where Amazon isn't even close to testing its low 180 support. So closing below 198.03 this week in Amazon, expect within 1 to 3 weeks, 182.41, where we could bottom out for the rest of the year actually and round up from here. Upside, I can jump to Amazon and show this chart that you've got that 198 handle support. 219.91 is a 3/8 upside Fibonacci that held about a month ago, but I really see our breakout resistance as 234.34. So it's a lot of stair step right now, buying 198 handle, selling 219 as a swing trade, buying above 219.91, holding out for 234.34. This is breakout resistance to the upside through the rest of the year. If we can close above this 234 and dropping, and we cover this every week at wickedstocks.com. If we can close above this formation, good low for the year, and this channel top that is presently, it's around 283.68. I'll type that in there right now. This would be the objective within 3 to 5 months or sooner of closing above 234.34 in Amazon. Do you have any comments or questions about that, Kenny?
No, I fully agree with Amazon. I feel like there's like a bull flag there. But it's probably going to take a couple weeks. It's probably going to be range bound between that 198 to 219.
I think you're right. You're right. Apple tested and has been testing this 5-year channel top since December of 24. We did it most recently December of 25 and falling away. I'd keep telling our wickedstocks.com subscribers that if you're a longer-term position holder in Apple, actually the bottom line is I'm not crazy about holding a long-term position in Apple right now, because I think the susceptibility is, as has been proven in the past, that we could fall back into the mid 190s over the next, I don't know, the timing of this is next to impossible, over the next full year or sooner. I will say that if we were to close below this structure here, and you can see it's at 234.98 in that yellow box, that is the channel bottom. That is your support that you can buy into actually through April and round back up perhaps. But if we close below just the low 230s in Apple, I see this 195.45 as a probable 2 to 3 month objective where you can aggressively buy Apple on an investment long-term basis. Last thing I'll say about Apple is if we do close above, and this would be in the months ahead, not in the weeks ahead, above 289.23 and climbing, you have like this new paradigm in Apple where you're just expecting a sustained move, full channel extension to the upside. Like I showed the full channel extension to the downside in Microsoft, it would be to the upside in Apple where we're expecting the 380s and climbing over the following 1 to 2 years. So investment grade, a buy signal with a settlement above 289.23. Until then, long term, you're bottom picking what is now in the mid 190s and climbing.
So, such a range on Apple, and I tell people this about Apple is like, to me, it's hard for me to see anything above 295 because the truth is something really exciting got to come out from Apple because it's such a stable stock.
I agree.
That range between 195 and 289 it's been like that for years. I just don't see, it really changing unless a major economy shift or a major product comes out that is changing the world from Apple, it just has become so stable to the point where it touches 214, is spiking back up to like 250. You know what I mean? So many people quickly, if it touched 195, you're going to see 215, 220 easily. It just doesn't stay there. And the proof is, if you look at, Apple on, like, you have the weekly chart up, but if you look at, just on the monthly, like back in, let's say right here, let me see, on April 2025, Apple went all the way down to,
down to 169.21. This is the
it was
tariff.
bought,
This was
yeah,
the early Trump administration tariff talk.
it was bought so quickly that it didn't even get opportunity to stay down there. And then you can also see that even, back in, January, where it fell close to like 240, and it was bought up quickly. It started to head back down there, but that's just a retracement. I feel like once it gets to that 220 mark, it'll just be bought up again.
I think this channel bottom, I agree. This descending channel bottom is a 4, 5, 6 month channel structure, and it should be respected for containing monthly selling pressures. And from here we can round up. One thing about this April low, if I don't know if you remember that or not, but we were in the middle of all the tariffs with China, and it was during this week that looked like to be a meltdown week for Apple because they were being barred from the Chinese market. Was the Trump administration relaxing exclusions for Apple products, smartphones, tablets, that sort of thing in the Chinese market. So that actually saved the day, and then we continued on up. This is kind of the explosion.
It's such a big company that even if it's bad news, and it's just, to me, that buying opportunity, that 195, you probably had about 40 minutes to buy as much stock as you can in Apple. You know what I mean? When it fell.
I agree. Tesla, we cover this every day for free on the Wicked Stocks YouTube channel. We've been in a sell signal for 6 weeks following the settlement below this channel bottom at 428.22, and our target all along has been 333.59. And this may be reached here over the next week or two. 333.59 is a solid zone to cover any short positions that may have been established 6 weeks ago, and it's also an area to buy into the market on a monthly, even quarterly basis. We can round up from here back into the 420s, 430s, and potentially, as we continue into later year, find ourselves in the 500 handle. But if we close below, I can show that right now. If we close below 333.59 this week, we are expecting a continued meltdown into the low 200s, 220s. I think would be a realistic objective if we do close below this channel bottoms. But I'm not expecting that. But that would be my objective if we did close below 333.59. Until then, this is the area to stick your neck out in Tesla as we continue really through the rest of the year.
Yeah.
NVIDIA, we cover this at wickedstocks.com every single day as part of a subscription package, but I do show the broad brushstroke analysis here. We settled a couple of weeks ago below this channel bottom. This is kind of a continued theme where you're settling below a 3-4 month channel bottom. We did it, in the S&P 500 2 weeks ago, NASDAQ 100 last week. And in NVIDIA, we're anticipating this descending channel bottom at 154.13 as a 3 to 5 week target. And we like this as an area to not only cover a short position, but even to buy into aggressively as we move into the third quarter. Through the second quarter, we can round up from here nicely. It also correlates well with the high area from November of 24 and January of 25. Even if we did violate 154.13, close below at the end of this week, I'm only then expecting 137.92, and that is a substantial 2-3 year channel bottom that can contain annual selling pressures. 137.92 I call investment grade buy opportunity. 154.13 is kind of the same. This could be it for the year here. I just don't see NVIDIA falling out of bed significantly, just given what's happening with all the investment that's pouring into AI. From 154.13, we could round up not only into the mid 170s, but even all the way back to what I call then channel resistance in the 190s, which would be a significant buy signal if we were to get up and over the 190s. But for right now, it looks like 175.41 is going to hold the highs. I think this market wants to fall into the low to mid 150s, which would be a buy opportunity not only through April, but into later year. Yes, if we close this week back above 175.41, I think that would also be consistent with crude oil dropping, a peace proposal that's agreed upon in Iran, and then this we stabilize in NVIDIA. But for right now, we're in a near-term sell signal into April activity. And then Palantir, I'll show that here real quick. Palantir settled in a sell signal last week. We got a reversal high, a new pullback high following the low area from February, and we closed then below the previous week's low. We had a quiet consolidation here. So I think Palantir is likely to fall back into the mid 120s, 124.11, 125.41 is that high from February 25. This is a decent area to bottom pick through April, and even through the second quarter, we can round up again. If we do close below 124.11 this week, which is not likely, but if over the next few weeks we violate this channel bottom, I would expect continued declines, like a 50% loss. And that's not saying much with Palantir because it's got such wild swings anyway. But if we close below the 124 handle, we enter this old range. And I would expect the mid 60s essentially if we close below 124.11. Upside, if we can close back above 149.53 this week, I think we've got a good low through April. And I would then expect this 174.39 level. So once again, if we can close above this structure that is at 149.53, if I think I drew that correctly, we're looking for a 3 to 5 week rally into the mid 170s. This is our buy signal into later year. And so this is also a sell opportunity as we move through May and June. We could fall back again. And finally, I'm just going to go over Bitcoin. Just an update. We had a big sell signal back in January with the violation of this 3-year channel bottom that is now 90,470. And then anticipating this long-term channel bottom that goes back, the origins are December of 17. So, you know, this is the better part of a decade-long channel bottom. I consider 60,041 to kind of be the threshold that needs to hold in Bitcoin, can hold in Bitcoin through the rest of the year. And from here, we can round up, we can just, there could be a significant comeback in Bitcoin as we move, not so much through the rest of 26, because I think that's going to be a challenge. But as we get into later decade, we can round up, to new highs. There is this 74.412 rather. That is this low back in April 25. You also have 73,791, which is the high from March of 24. This area has been holding the highs over the last month, and below which, still anticipating 60,041. If we can close this week above 74,412, which is not likely, but if so, we've got a 1 to 3 month rally into the low 90,000 area where this market could actually top out through into the third quarter, fall away. Finally, closing below 60,041 at the end of this week, which I also don't think is likely. But if so, I'm just going to go out on a limb and say that Bitcoin has lost its luster as a speculative entity. It'll take a backseat to lots of other elements, and it's already kind of happening, but I think it kind of becomes official. If we were to close below 60,041, I would expect, quite honestly, over the following, year or less, probably the next full year, continued declines into this substantial area between roughly 15 and 20,000. I know that sounds pretty dramatic, but Bitcoin has that kind of a history, and I wouldn't be surprised to see this as an outcome if we close below 60,041. But until then, if you're looking to buy Bitcoin, it's the low 60,000 area through the rest of the year.
That's what do you think about the overall census of the market for the next 2 days? What has to come out for the shift to change from where we're at?
I don't think it's even, I think you're going to get upside pops with positive economic data, that doesn't show that inflation is a real issue right now. But I think the entire world right now is on pause, wanting to see what's going to happen with the Straits of Hormuz, because it's The Europeans and the Asians are so much more dependent on Middle Eastern oil. It's a choke point, literally economically. Asia and Europe could early stages slip into a recession and show that kind of data. I just think everything right now rests on the Middle East. I mean, that could change in the next few weeks as we just sort of, if this turns into a forever war, where it's just we're just there for a long time and it's not real hot, people aren't dying, it's just a kind of a stalemate. That's going to be more of a stagflationary thing. You're going to see oil prices hanging out around $100 a barrel, which is a big deal if it stays there through the rest of the year. That's I don't know, what is that, an 80% increase in the price of gas? So yeah, I think everything rests on the Middle East. I don't know what kind of economic data right now can actually turn this market from what I consider to be on the precipice of a continued sell-off to actually just the opposite, a rally as we move into later Q2. That has everything to do with what's going on right now in Iran.
Well, I'm gonna end it there. Everybody check out wickedstocks.com, for information to option plays, stuff like that. So peace.
Thank you, sir.